Hello and welcome to goldtradingexperts.com. In this short video we're going to walk you through how we used our trading approach to bank a fantastic $87 profit in a single trade. So let's get started. What we've got in front of us here is a daily chart of gold, and we focused in on a period between July 2013 December 2013, with our trade being based around the movement of gold, where we had a peak at 1433 on the 28th of August, and then we had an ABC correction downwards which ended with the C wave at 1251 on the 15th of October. Now we can see that the A wave went from the 1433 high down to 1291 on the 18th of September, and that in itself can be seen to be a 5-wave move. Then we had a very sharp B wave that only took 2 days to complete, hitting a high at 1375 on the 19th of September 2013. It's interesting to see there that also the 20-day moving average was providing resistance. Then we had another 5-wave move down for C, which ended at 1251, where we had a sharp hammer candlestick that confirmed that the correction was over, and then we had a sharp rally. Now, the prevailing trend at this time was clearly down, so we were taking predominantly short positions, and what we were looking for here was a retrace that we could open a short position on. So what we saw was gold moved sharply higher from the 1251 low, moving as high as the 100-day moving average a few days later, and that was around about the 38.2% retracement level. The market paused there for a while, and then we had another sharp up thrust, so really a 3-wave move, which hit the high of 1362 on the 28th of October. Now this high was virtually at the 61.8% retracement level, so we were very much on alert that this was where we wanted the price to go to, a classic 61.8% retracement, though we needed some confirmation that the price was stopping here and wasn't going to power higher in an extended rally. What we saw was first on the 28th of October a shooting star candlestick that suggested that a top was in. However, we waited till the next day. We had a bit of a move lower and a lower high, the high 1360 coming in on the 29th of October. And then we took our plunge when we saw the price recover to 1360 again on the 30th before starting to fall. We took this as our cue to enter the market. It was clear the market was stalling at this 1360 level, right on the 61.8% retracement, and we entered a short position at 1358 on the 30th of October. Now you'll see from there the market fell sharply until early November, where we found support at 1306, and the market then consolidated for a little while. What we saw then was a 55-point drop from the high at 1361 down to the initial support level at 1306. Then what we saw was what we call a bear flag, where the price consolidates for a few days after a sharp decline before another sharp decline occurs, which takes the price down usually an equal amount to the first part of the flag. So what we were looking for was, we saw that the high from the bear flag was 1326. You can see that there on the chart. So we quickly calculated that our target for this bear flag was 1271. So with that in mind, as the market started to move lower, we trailed our stop loss down. When we saw the 1326 high being made in the bear flag, we pulled our stop right down to 1330, so that if the market did shoot higher, we had at least some points in the bag. We held on to 1271. We took our profits for an 87-point profit on this trade. The market did continue to fall, but we'd taken our money. We'd made 87 points, and that was a good trade for us. Thank you for watching. If you'd like to work with us to develop your trading skills so that you can make similar gains, sign up on the Our Products page at www.goldtradingexperts.com.